David Shapiro, a big smile on your face. 2 days in a row that the markets are up.
It's a proper bull market now.
I had quite a few SMSs last night between Paul Harris and I on the fact that you might remember that I said Warren Buffett's company had done better than First Rand had done. Paul took me a 50 Rand bet, so I quickly went to the internet and had a look, and he was right. In fact, Warren Buffett's company, I was looking at the annual financial statements, which shows that he was down 10% last year.
His intrinsic value down.
And the S&P was down 37%. So, in fact, on a relative basis, it was his second best year since 1981 for Warren Buffett. But what Paul was comparing was that First Rand's profits were down 23%, whereas Berkshire's profits were down 62%. So I humbly will send Paul Harris the 50 Rand. And I'm not going to sign it, though, otherwise Tito will be very cross. You're not allowed to deface South African banknotes. But, Paul, you deservedly get your 50 Rand, and my most humblest, grovelling apology for slipping up on that one. Anyway, having put that straight, David, there's nothing to put straight on the markets today, just strong.
It's very strong. Again, banks led the way up. Huge rises in a number of them. And I think, Alec, bulls are just looking for anything to push this market better. I think they attribute it to statements that came out of Tim Geithner now, who's the Secretary of the Treasury in the United States. He's injecting capital in order to alleviate some pressure on the banks. And there was also a $410 billion package that was passed by Congress. But I didn't think, last week if those things had come out, I don't think they would have had the same kind of effect. So I think building up on the good news that we had out of Citibank yesterday. But listen, it's set global markets alight, and I think we'll buy anything at this stage. Anything that helps us.
5% for financials, 3% for all share index. I spent 10 minutes with Julian Roberts today.
Yeah.
David, I'm not so sure about this anymore.
Wow.
I thought it was a home run, easy. I'm not so sure anymore. Talking to him, to me, it looks like Old Mutual still has a lot of hurdles to overcome.
Well, the market's saying that. Even after those results came out, the market plummeted, and they were marked down. I think it was Merrill that had them as an underperformer. The market responded to them. They've just picked up to 5. They're still below where they were last week, and even their debt and preference shares are not responding. Still trading at ridiculously high yields. So there are matters that are worrying the outside public or the investors.
We've got the highlights of some of that discussion later, but really the issue is they've got 32 billion pounds in corporate debt instruments. And if only 10% of that goes south, and we know what's happening in the US economy, then Old Mutual hasn't got the capital to be able to keep it going.
Well, they haven't. They say they have. They
haven't. If 10% go, they're gone.
Well, 10% goes. Yeah, I can't
10%
argue that.
of the corporate
He
debt.
says they've stress tested.
He said that.
He said they've stress tested and they feel quite secure.
They wrote off. They put to one side about 6% of those corporate bonds. So in other words, saying, well, that's what they accounted for in this past period. But take it a little bit higher, and where are they going to get the capital from? That was. He's convincing, and he knows his business, and he's a financial man. And he says they went through very specifically through all of the corporate bonds. But if you have one or two, and heavens, we've had Lehman Brothers, we've had Washington Mutual, and those cost Old Mutual a lot of money. Who's to say that you won't have 1, 2, 3, 5, 10 big American companies going belly up, and they forget about being able to pay their corporate bonds? They just have to write them off.
Yeah,
I'm not a big bull. I was a bull last week. Thought, crumbs, at these levels, how can you go wrong with Old Mutual? Not so sure anymore.
Well, we have to, I don't think anybody can give you the answer. That's the problem.
It's a wait and see.
It is a wait and see.
And hope like hell that
but
Obama's
Alec,
bailout works.
It's your uncertainty that's that is, I think, shared by so many other investors. Those bonds you can pick up, the corporate bonds, you can pick up Old Mutual's bonds trading at anywhere from 20 to 25% 1 year out.
And there's a reason for that.
Well, it's the worry.
Clearly, the more you investigate. In fact, there are 2 brilliant articles that Felicity Duncan has written on the whole subject on MoneyWeb right now. If you're an Old Mutual shareholder, and there are hundreds of thousands of those in the country, go and look on MoneyWeb, go and read about it. You'll get a better insight into what's going on. Yeah. The volatility index down a little bit today, David, below 40%.
I think just because there's a slightly bullish tone in the market, so a bit of the risk being taken out. And I just hope it builds on itself, even if it is a rally in a bear market. I think we need this just to sustain a bit of confidence.
We talk of dead cat bounces. And for those who are uninitiated to the investment world, they say that if you drop a cat off a building, of a very tall building, when it hits the
Even a dead
pavement,
cat,
even that is going to
bounce.
you don't drop a live cat; it's a dead cat, and it'll bounce off the pavement. It's a very crude investment term, but it suggests that it's a little bit of an uptick in a general downtrend. Your thoughts?
Well, it's so oversold. And I think the news so far has been very flimsy, but it just shows you the market is looking for news. But we need real news. We need real news that the banks are in good shape, that economies are stabilizing. And I think against that, you've got Rudolph in the studio now. You can see how investors are thinking in South Africa, still at with investor confidence down at a 10-year low. You need that to stabilize and that to start turning upwards, and then we'll get a proper, a solid rally.
Massive volatility. SAPI up 17%, ABSA up 12%. So who would want to be a trader in this market?
Yeah, I think the bears are being squeezed as well. A lot of people are short on the market, and as soon as there's any hint of a turnaround, they come in, cover their shorts, which also gives the market a bit of an upswing.
So that's technical, but it means
very
for technical
technical
reasons, you could have these big volatile, big swings.
Sure.